fresh. I'm Alex Beattie, divorce prep coach, aka the divorce planner. I'm so thrilled to hold these in conversation with interviews with different divorce professionals. Today, one of my favorite guests is with us, financial planner Josephti Cruz of the Wealth Garden. Josephti's been on this interview series before with me. And the focus of today is really about helping you prepare financially, especially when it comes to retirement, when you're negotiating a divorce, giving you prep and planning tips, maybe opening you up to some mistakes you want to avoid, taking your questions. So if you have a question, drop it in the comments. I'll get to it. But I'm going to tee it up with a couple of questions for Josephti. And thank you so much for joining me.
Hey.
So you are based in California. You have a lot of really kind of very highbrow experience, having been in finance in New York before moving to California, and now having your own company that oversees, over millions and millions and millions of dollars of people's hard-earned money. You've had a lot of experience with clients going through divorce. You and I personally went through this whole journey as well. I love being able to highlight people who not only are in the niche helping, but have gone through it. I think it really is a game changer, as opposed to other people out there who haven't firsthand navigated this big life challenge. So I just kind of want to jump in with some general questions. First and foremost, what are the best ways that you help guide clients to prepare in advance of divorce so that their finances are in the best shape possible?
The best thing to do is start figuring out your finances. And if you've never had to do it before, it could initially feel intimidating, but maybe breaking it out into little bits and pieces. So trying to figure out your family's different income streams.
Mm-hmm.
Do that for one day, and then you go the next day and you figure out what are different expenses, how much does it cost to live, what are different debts and liabilities, collecting that on a different day, and then maybe some other time trying to figure out what kind of assets does your family have. Do you have a home? Do you have savings accounts, checking accounts, investment accounts, retirement, things like that? So there's a good to-do list, but if you do it 10 to 15 minutes a day, it's not too bad.
Okay, I love being able to break it down so it doesn't seem overwhelming. I think one of the biggest hurdles that my clients have, and we navigated, is your life doesn't just stop because you're getting a separation or a divorce. You're still juggling, all the other big responsibilities, whether you're working inside the home, outside the home, maybe you have kids or not, you have other demands on your life. And then kind of preparing for a divorce and going through this whole process is another full-time job. So being able to break things up into manageable to-dos, whether it's a daily to-do or a weekly, having a short list, please do that, because I know how overwhelming it can be. And a lot of people just kind of want to bury their head in the sand. And I would say, especially maybe people who haven't been in charge of the finances in their marriage. And that's a really common thing, right? You split up different tasks. Maybe you're in charge of dealing with everything to do with keep maintaining a home, or perhaps you're working outside of the home and you don't have time for anything beyond that. So you have another spouse who is in charge of all of the finances, and maybe you're feeling a little in the dark. What can you do if you're in that position?
First of all, I think everyone needs to be kind to themselves, right? So if you've never managed the finances, don't be hard on yourself. This is just a learning opportunity. You're learning something new.
Yeah.
Right? You're going to become more educated. You're working towards your independence. That's what divorce is going to be. And this could be looked at as a negative thing or as a good thing. So really, I would start with your mindset and making it positive, or trying.
I love that. It kind of speaks to my whole ethos of separating the emotional side of the divorce from the business side of divorce. And I love that you said, be gentle with yourself, be kind, like don't beat yourself up. And I think, a lot of people do feel that way, especially my stay-at-home parents kind of feel like I've put myself in a terrible position. Now, today is your opportunity to change that and start educating yourself. And remember that all of this kind of legwork and prep work you put in now is going to serve you in your life after divorce, as well as during your divorce negotiations. So if you're feeling overwhelmed, please take a deep breath, check my page for tips onto how to break things up into manageable tasks. But I want to get back to kind of when you're preparing for a divorce and you're going through and you're figuring out what your assets are. And for anybody who doesn't know what that means, please go to the Divorce Planner blog. There is an entire post all about how to protect your assets, also what the differences are in assets. Please head to the blog. I'll link it in this post immediately after as well, because there are different kinds of assets. And one of the biggest assets that you and your soon-to-be ex might have are retirement accounts. How can somebody really prepare for the big changes that are going to hit them because of a divorce, especially for people who've been in a long-term marriage and, you know, now you're at a point where, crap, what's my future going to look like?
I mean, the first thing to do is stop living in the gray, right? So you gotta know what you have.
Yeah.
From there, create your baseline. How do you create your baseline? Find out your information. And if you weren't that financial person in the relationship and you're not ready to ask your spouse for the information, let's say you don't have it and
Mm-hmm.
because maybe you haven't announced that you're ready to separate, you can always pick up the mail every day and see what comes in that way. That's one way to do it. Every year you have to file a tax
Mm-hmm.
return. You must,
Yeah.
right? If you had a joint tax return, so you could check that out. And within those pages, you can typically find clues in there to see what kinds of accounts exist, even if it doesn't have your name on it.
Mm-hmm.
If you have a joint account where you pay expenses from or a credit card, but you've never logged in, you can find out, let's say you have a Chase account and you know that you withdraw money from it, you could always go to the bank. And if your name's on it, they have to give you the information.
Yeah.
Some of the things you can do if you're not ready to ask for it from your spouse, but you want to start finding out what you've got.
Those are great. Thank you for kind of going back and being so thorough and helpful with even more ways if you haven't been the primary person, or even maybe you have been handling a lot of the finances but you don't have access to some. Those are such golden nuggets in terms of where to find more information. And also, don't feel overwhelmed if you can't get your hands on everything initially. Start with making a list of everything you can get your hands on and get copies of all of those statements and documents. I've got a what to gather worksheet on the website if you need help figuring out what those things are. But also keep a list of what you can't get your hands on. There will be a discovery process at the beginning of your divorce where you're giving all of your information to a divorce attorney or a mediator, as is your soon to be ex. More often than not, people are transparent. It's a really big no-no to hide anything. Please don't hide assets, you know. And I understand if you're trying to prepare yourself, maybe you think, okay, well, all we have are our joint accounts. I don't even have like a tiny bit of savings in case of an emergency. Yes, you can put a little bit of money to the side, but please know that's going to count as your marital assets. Don't try to like hide that while you're doing that. And everything will be equalized as to what the marital assets were during the divorce process. So again, be above board. Don't be intimidated. And Josephti, thank you. 100%. Check your tax returns. That's going to give you a lot of information. I love your tip about checking the mail. Like, just pay attention to what bank statements are coming in. And then going to my next question, what should people be taking into advance consideration about retirement accounts and how to kind of negotiate splitting those up potentially? And what do you do about now that your planning has kind of had a huge wrench thrown in it because of a divorce?
Well, know that in a divorce, assets will be split equitably.
Mhm.
Maybe it won't be split in half, but it's supposed to be split equitably. And that means analyze all the assets that you've created together in your marriage, and then it will, however, different assets count for different things or in different values, I guess. So a pre-tax 401k or IRA, $100,000 in that is not the same as $100,000 in a bank account, just because IRAs and 401ks get taxed. So it's actually worth less than the 100,000 that it looks like. So these are the types of things you need to look at when, I guess, negotiating how to divide assets. And yes, your retirement is going to be affected. You're going to have to pivot a little bit. It's not a bad thing. It's just a knowledge
Yeah.
thing, right? So in the future, you, unless, maybe you'll pair up with someone else, maybe you won't, but yeah, you're going to be retiring with less assets because you two are going to split everything, right?
Mm-hmm.
Different, it might not be worse, but it's going to look different because you're going to be working with different pieces than.
Uh, yeah, that makes perfect sense. And when is the best time to really kind of start maybe taking meetings with a financial planner if you have a financial planner, or maybe if you don't, and you're about to go through a split? When's too soon? When's the right time?
It's never too soon. I mean, it's always great to find a person that is experienced in this and
Mm-hmm.
experienced in finances to help you organize questions that maybe you hadn't thought about, to remind you to look for a certain information, or even help you gather it, right? I help my clients literally all the time into bank websites and find the relevant information they need to gather.
Mm-hmm.
It's never too early, and at the same time, it's rarely too late, right? Bring
I
them in.
love I love that you said that it's not too late. Start from where you are. Don't feel so behind the eight ball. You can start today for sure. And kind of going through the experience you've had with clients, do you find that there's a different, like, what mistakes people tend to make going through the divorce process when they're not paying attention or thinking about their retirement?
I think sometimes people tend to rush through the process because they get on with it. And while I don't want people to hang out forever, because maybe someone I know that would drag it out for 4 years, just because they didn't feel ready, right? Let it move along, but you also don't need to rush, right? Feel methodical, do what you need to do to research what you want. At the same time, you do need to gain a good understanding of the different assets that are up for negotiation and up for splitting, as well as the different incomes. So, like we talked about earlier, retirement assets are kind of valued differently than taxable assets. Splitting up the value of your home, if someone is going to keep the home or not keep the home, there are a lot of different pieces in there that need to be taken into account, including the mortgage and what kind of capital gain or profit is in the house already,
Mm-hmm.
how to split that responsibility between the two people. So there are a lot of things to think about. So just make rush through the process and disregard it.
You brought up one of the biggest assets people can have is the family home, right? Whether it's a condo, a farm, a house, whatever it is. And it's another one of the instances. There's so many different kind of challenges you go through during divorce that have an emotional trigger associated with it. So not only being able to crunch the numbers if you do want to keep the family property to make sure you can afford that, but also kind of check in with yourself about why do I want to keep this place? Number one, identifying what the priority in that is. Maybe it's I'm scared to try something new, or I don't want to leave this neighborhood. Maybe it's practical things like all of my resources are here. If you have kids, the school is close by. But definitely crunching the numbers before making that kind of commitment. As to what the reality of the costs of maintaining that property on your own after a divorce is one of the most important things you can do before agreeing to keep an asset. I love, Josephti, that you brought up the financial implications when it comes to taxes, right? So when you go from joint ownership of a property to sole ownership, your exposure for taxes later down the line for selling is going to be much different. It is something you do want to take into consideration, as well as property taxes every year, every expense that goes into keeping a home, and little emergency fund for maintenance. All of these things need to be taken into consideration before agreeing to keep any high ticket item asset during your divorce negotiation, because the last thing you want to do is agree to keep something only a year down the road to realize you can't afford it and now you've got to sell it at a loss. Um, So to that, if you're struggling, you're not sure whether or not to keep the family home, I have another post on the blog, 4 questions you need to ask yourself if you want to keep the family home. Please head over to the Divorce Planner's website, www.thedivorceplanner.net/blog. Pretty easy. And you'll get that as well as the other posts that I mentioned earlier. And I think just kind of like wrapping this up, I love to keep these conversations kind of like a tight 20 minutes. I have noticed more often than not that I think that people have this idea of a financial planner is kind of like not within their budget range. Like they actually don't know what it means to work with a financial planner. People think that it's a high ticket cost. I think the same way they think of first like a divorce coach might be, but it's not, because in the end, investing and working with a financial planner during divorce, a divorce coach, working with a financial planner about your retirement so you can navigate all those transitions now. It doesn't have to be out of your price range. Can you explain exactly how you work with clients and what fees are involved and how to contact you?
Sure. So I work with clients in different ways. So for clients maybe just starting out, but they want to get organized and put in the right direction, I do offer a 6-month financial consulting. Uh, there's a beginning and there's an end, and basically your accountability coach. Mm-hmm. We put plan together. I help you organize your documents, put a plan in place, and make it as easy as possible for you so that you can continue on by yourself, if you choose to, right? So if you want to continue on by yourself after the 6 months, I give you all the tools you need so that you can do that. And then in the future, should you want to change anything or modify anything, we can meet again in the future.
Well, hold on. That's fantastic. I didn't realize that you had this kind of financial program available to help people kind of work through where they are, give them the tools to plan for what's next, and really set them on their way. I think that's fantastic.
Yeah. So a lot of the clients in this space that I help typically just need help with taking a look at their budget, figuring out what their budget is. So we spend a lot of time on that. So figuring out, how much they spend, where they can make cuts, where they can save more, things like that. And then we look at other aspects of the financial plan too. But I would say that's the big part. Mm-hmm. And then we talk investments and estate planning and things like that as needed. Right. So
yeah.
So
that's really great.
Cost effective, foot in the door kind of, start for people that feel like they just want to get started and go somewhere, right? So most of my clients work with me on an ongoing basis where we do that, and we do it on an ongoing basis over and over, maintaining, revising, planning, changing. And the way I charge for that is I manage their investment assets in their portfolio, and I charge a percentage of assets under management. The payment comes directly from the investment portfolio, so you don't feel like you have to write a check every quarter. It comes from that. And the idea is I'm helping you with your financial life. I'm helping you grow your assets in a way that I actually think would be an improvement over perhaps you doing it on your own or not at all. Usually people don't do it at all, right? So I'm getting you to do it, and I'm getting you to improve your financial life and your assets.
Well, it's one of the biggest things that I work with my clients on when I'm preparing them in advance of a separation or a divorce, of like making sure that they have a mind towards their new chapter, setting themselves up financially for success, thinking about their retirement. So it's never too early to really get in and start working with a financial planner. And it's going to be another good investment that you have, because you want look, there are so many different kind of variables. You never know what somebody's budget is, but the fact that you can work with a financial planner who's going to oversee if you have a 401k, if you have a SEP IRA, if you have a pension, whatever that is, and be able to have their eyes on it and make adjustments as necessary, and you don't have to write them a check once a year. I'm into it. It's like the best investment you can make in your future. Well, Josephti, thank you so much for talking to me today and for kind of sharing all these wonderful little tips and tools about financial planning during divorce with an eye towards kind of setting yourself up for success in your life after, specifically, especially with retirement, which, can take a real hit when you go through a divorce. So please don't feel like the wind has kind of completely gone out of your sails. Know that there are options for you and ways to build up your finances and your assets after divorce and take action now. But thank you for everybody who joined us. And Josephti, thank you as always for being such a wonderful, insightful guest. And I hope to have you on again in the near future.
My website, because I didn't answer that part of your
Oh,
question.
yeah.
The Wealth Garden, F is in Frank, S is in Sam.com. So Wealth Garden, the Wealth Garden Financial Services.com.
And I'll also tag that in this post once we conclude. But thank you, everybody. Thank you so much. And join me next time. I'll be talking with a CDRE. That's a certified divorce real estate expert. And that's going to be a week from Friday. And if you have any questions or you want insights from divorce professionals, please check the Divorce Planners blog. I've got interviews with divorce attorneys, mediators, financial planners, and retirement specialists, including Josephti Cruz, as well as CDREs and more. And please subscribe to the newsletter if you want divorce prep tips and financial planning tools right in your inbox. I'll see you next time. Thanks, Josephti.
Alex.
Bye.